Calgary's February market update really comes down to one central theme, and it's something like a tale of two markets. Depending on the type of property you're looking at, the experience of buyers and sellers can feel completely different. Some segments of the market are still holding together relatively well, while others are clearly under pressure. When you zoom out, the overall numbers suggest a market that's cooled significantly from last year, with prices down and sales activity slowing. But those big picture stats don't really tell the full story. The real divergence starts to show when you break things down by property type, especially between detached and semi-detached versus row homes and apartments. So starting with the overall market, the benchmark price for the average Calgary home came in at $554,000, which is down 4.7% year over year, with days on market sitting at around 53 days to sell the average Calgary home. In January, we saw 1,234 total home sales, which is down 14.8% from this time last year. Inventory is currently sitting at 4,391 active listings, which is giving us around 3.56 months of supply. So at the overall level, this is a market that's clearly slowed compared to last year, but it's certainly not falling apart. Sales are down and prices have pulled back overall, which tells us that buyers are taking more time and being more selective. However, you can see here that between December to January, the downward slide of sales and prices appears to have bottomed out. Now, if that trend holds, I suspect you might see prices and sales start to pick back up a little this month as we move into the spring market. In terms of sales pace, the average days on market is still trending upward, and this looks to me like a trend that will probably continue. That's a pretty strong trend line. That said, the inventory is still sitting in what I'd call a balanced range, certainly a little towards the high end, but not excessive at all by historical standards. This sets the stage for what we're seeing beneath the surface. Certain property types are absorbing this slowdown a lot better than others. The detached benchmark home price is currently sitting at around $724,000, which is down 3.4% from this time last year, with the average days on market currently sitting at 48 days. In January, there were 657 detached home sales, which is down only 2% year over year. And new listings in this segment came in at 1,243, bringing the current months of supply to 2.67. So detached homes are still the most resilient part of the market right now. Prices are down slightly year over year, but sales are only marginally lower, and months of supply tells us that this segment of the market is still in balanced market territory. Demand is definitely still there, especially for well-priced homes. However, buyers are being slightly more cautious than they have been in years past. Detached homes continue to benefit from strong long-term appeal and limited supply, and these factors are helping this segment hold its ground. The semi-detached benchmark home price came in at $667,000, which is down 1.1% year over year, with the average days on market in this segment sitting at 61 days. In January, there were 118 semi-detached home sales, which is down 26% year over year. And new listings in this segment came in at 251, giving us a total months of supply of 3.54. Semi-detached homes are sitting in a bit of a middle ground right now. Prices have held up relatively well, but sales have slowed down sharply compared to last year. And the pace of sales has definitely slowed, with the days on market increasing. This suggests that buyers are being more price sensitive than they had been and are willing to wait longer for the right opportunity. With months of supply creeping up, sellers need to be more realistic when it comes to pricing and presentation, because this segment no longer has the urgency that it did in the peak of the market. The row house benchmark price is currently sitting at around $421,000, which is down 5.2% year over year. The average days on market for row housing is currently sitting at days. And in January, there were 186 row home sales, which is down 25% year over year. New listings in this segment came in at 504, with the current months of supply coming in at 5.26. Row homes are where we're starting to see these two markets really start to diverge from one another. Sales are down significantly, the prices are falling faster than in the low density segments, and months of supply has pushed well into buyer's market territory. This segment is definitely feeling the impact of affordability constraints and increased competition from both new listings and apartments. Buyers here definitely have options, and they know it. The apartment benchmark price in Calgary is currently sitting at around 301,000, which is down 7.7% year over year, with the average days on market currently sitting at around 65 days. Apartment sales are down 26% year over year, with total apartment sales in January coming in at 273. New listings in this segment came in at 787, with the current months of supply coming in at 5.26, placing the apartment segment firmly in buyer's market territory. So apartments are clearly the softest segment of the market right now. Prices are down the most year over year, sales have dropped sharply, and inventory levels are continuing to rise. With longer days on market and plenty of choice, buyers now have a lot more negotiating power, especially when it comes to older or less desirable units. For apartment sellers, pricing and position are absolutely critical right now. So if you need to be selling an apartment this year, you need to make sure that you are doing everything you can to stand out. So that's your February 2026 Calgary market update. I really hope you found that information valuable, and if you did, please do hit like and subscribe, and I will see you in the next one.